Welcome to another one of my Money Talks video casts. My name is Jerry Slusowitz. I'm a professional money manager with over 25 years professional experience helping individual investors just like yourself. If you want to get that free portfolio review, which is very important in this economic environment, please call me now, 800-449-9501. That's 800-449-9501. Or look me up on the web, www.yourmoneytalks.com. Today is Tuesday, May 22nd, and it's been a little bit since we've updated these. We're going to probably space these out more like once a month or as needed with market conditions. But the market has been down 13 of the last 15 days measured by the Dow Jones Industrial Average. Now, that sounds pretty bad, and it does look pretty bad, but the number, percentage-wise, isn't horrible. We're only down like 6.25%. Some of the broader indices down a little bit more than that, but still not even at the 10% correction threshold. But the interesting thing is if you look at the markets, we've had a series of lower highs and lower lows, and then we've kind of started to fall off. Now, usually when we get this oversold, you would expect some sort of bounce, which we did have yesterday, and not much of a follow-through today. The reason is there's a tremendous amount of institutional selling. As a matter of fact, last week was a distribution day every consecutive day, 5 days in a row. That means that the volume increased and the selling pressure increased every single day. Those events are rare. Even in the fall of 2008, when we started the big, huge decline where the markets ultimately dropped 54% from peak to trough, we didn't see 5 consecutive down days in a row. That just represents institutional selling. It's just not mom and pop selling or just advisors calling up saying sell, sell, sell. This is institutions lightening up. What do they see that's causing the concern? And that is the potential fallout of Greece leaving the European Union. Now, some people say, well, geez, Greece isn't a big part of it. They're not. But can you imagine if you were at a seminar or a comedy show that wasn't so good, either one, and you're sitting there going, I want to leave, I want to leave, I want to leave, but you don't want to be rude. Suddenly someone gets up and leaves the room. Suddenly a number of couples might get up and leave the room, you as well. That's what the fear is with the European Union, with Greece potentially exiting, is would that open the door for countries like Ireland, Spain, Portugal, would some of these other, what they call Club Med countries leave as well? In addition, mainstream media is not showing you or telling you how much of a run on the bank there is. People in Greece and in Spain and in Portugal are going to the banks every day, pulling euro out and sticking it on their mattress because they're afraid that the banks might have a bank holiday. I mean, let's think about this thing just logically. If, let's say, a Greece decides to drop the euro and go to drachma, they don't have drachma printed. They don't keep it in storage. They would have to close the banks, convert everything over. They'd have to reprint, refinance all those banks. There would be a bank holiday. That's happened before. Read the history about the Great Depression. That has got people very concerned. Yes, will we live through it? Sure. Will the European Union live through it? Yes, I believe so, because I think new countries would join in, perhaps Poland, perhaps England. And they might even be better off. They might form a Eurobond after that, after getting rid of some of the weaker links. But in the interim, will there be a dislocation in the market? A dislocation in the market is a nice word for crash. And I'm not saying the market will crash, but you must be warned that there is the potential for a crash coming. And if you look at the way the markets have set up, you were going up and up and up since October, and then we kind of peaked out. You've got a double top, in some cases a head and shoulders top, and now we've broken the uptrend, we've broken the neckline, and we are starting to go down. A little bounce back up to test that resistance to set in another lower high before falling off. That's what crashes look like. So again, I am not saying there will be a crash, but you must be prepared that the conditions are ripe for what they call a waterfall event. A waterfall, if you again know anything about topography, is waterfalls don't fall from the peak. It's not like the river goes like this and then suddenly falls off. What happens is the river's going along and then it starts to degrade, it starts to get faster. Why is the water going faster as it hits that? Does it know that there's a waterfall ahead? No, it starts to slump down and then it falls off. That's what the market's looking like, and the conditions are right fundamentally that the banking system is broken. We're in an international banking system. If you look at the United States banks, the biggest banks in America, they're down 30% in the last 2 months. That is a warning sign. So there are plenty of warnings out there. What should you do? People say all the time, oh, we couldn't see it coming, or we're all in this together. Nonsense. You need to have an exit strategy in place for each and every position. Should you hold or should you sell under these conditions? How much money would you be willing to lose from here on any of these positions is this other question you should ask yourself. Obviously, we invest to make money. You must think logically and say, hey, look, we want to make things work out, but what if it doesn't work out? What is the exit strategy in place? If you need help, call me, Jerry Salusowitz, 800-449-9501, 800-449-9501, or on the web at www.yourmoneytalks.com. Sign up for our free email newsletter, but call me for the review because you've been warned.